U.S. Farm Report on the road from the 2025 Commodity Classic is brought to you by DuraStack. Get stacked against corn rootworm with DuraStack trait technology, featuring 3 modes of action against corn rootworm. By Double Team. Double Team sorghum cropping solution can provide a robust return on your sorghum investment. By Grounded from Helena. Spray smarter this season with Grounded, a powerful adjuvant that can take your herbicide application to the next level. And by the United Soybean Board. Head online to see how 77 farmer leaders maximize the value of soy checkoff investments for all U.S. soybean farmers. Brought to you by the Soy Checkoff.
Welcome back to U.S. Farm Report this weekend from Commodity Classic here in Denver. Now, I have to let you know, we're having this discussion early in the week. We're having it pretty much just after we saw tariffs go into place. We saw China retaliate. There's a lot that could change yet this week by the time this airs, but we just want to preface it by saying just caution what we're talking about today with that. But I'm excited to have Chip Flory, Chip Nellinger, as well as Jared Creed joining me to talk markets. I mean, Chip, we're going to start with you. Tariffs. It's not like this is new. I mean, we've known since the president was inaugurated that he was going to put these tariffs in place. But we've been falling hard and we've been falling fast. And so why did this catch the market by surprise this week?
Well, you look at the corn market, 7 consecutive lower closes leading into the announcement of the tariffs. The corn market's got it baked in. Wheat, 6 consecutive lower closes. Beans, 4 consecutive lower closes. They've been anticipating it, and we've been anticipating it since the campaign, not just Inauguration Day. We knew that President Trump said that this was the policy that he was going to pursue, so it shouldn't surprise anybody.
Yeah, it shouldn't surprise anybody, but it did. And the market reacted, and as I said, reacted hard. And then we saw kind of Tuesday, early morning, that Beijing is going to retaliate, targeting ag, specifically saying they want to hurt farmers because they know farmers support Trump. Came out and said that. 15% tariffs on chicken, wheat, corn, cotton imports, 10% tariff on sorghum, soybeans, pork, beef, vegetables, produce more. I mean, there's so much here to dive into. But Chip, it feels like the market's acting like we've just shut down exports altogether.
Yeah, and to Chip's point earlier, it's a futures market, and we broke hard into this, and it's not a surprise. The timing is what was the surprise. And so if there was any surprise there that maybe caught the market flat-footed, it was the timing of these tariffs, and I think Trump tries to keep everyone on their toes with this. So the point being, we've got a lot of agricultural products outside of South America and their production there. Where are you going to get it, right? I mean, beans, China's not going to buy beans from us anyway, so tariffs are somewhat irrelevant because they have a record crop in Brazil. Other products, not so true across the country or across the rest of the world. So I think that sure, it's a negative tone right now, but I think the market's gone a long way digesting that. And at some point, you almost have to catch the falling knife.
Jared, do you think that the market's posted a February high?
I'm not willing to go that far at this point, but I think there's a consideration that all of the President Trump policies make the market believe that we're going into an inflationary environment. However, in all of his conversations, he continues to point to creating a deflationary environment. And I believe that's part of the recent sell-off that we've had in the last couple months. We've seen incessant buying from speculative funds, and I don't think that it had much to do with fundamental situations. I think it was all tied back to the belief of an inflationary market coming our way. That takes time to work out. So I don't know if I'm willing to chalk up the last week as the end of that concern.
Real quickly, we had the tariffs under Trump 1.0. Those were directed at China. Trump 2.0, Mexico, Canada.
Everybody.
China, everybody. Europe is starting to scramble, thinking that they're next. This is a different presidency. We got to remember that.
And it's about the negotiation of the deal, too.
Yes.
And we can't forget that, but we also can't forget that of our corn exports, 40% of our corn exports go to Mexico.
Right.
40% of our ethanol exports go to Canada. We don't know how, this is early in the week, so we're not sure how those countries are going to retaliate. But Chip, how much of our corn exports can we afford to lose and still meet USDA's current forecast?
0. You can't lose any.
And so then, Chip Nellinger, then we've got to figure out demand here domestically. We've been talking about E15, that is the quickest route to generate some domestic demand. Do you think, I mean, is that the only option?
Well, it might be the only option domestically. You could increase feed demand a little bit, but exports are such a crucial part of this. But again, it's a world market, and I think it puts that much more emphasis that Brazil raises a big second crop corn, because if they don't, there's nowhere else in the world to get corn right now.
Well, how can you manage this volatility with other options? And so that's what we want to ask Jared. But we need to take a quick break, and then we'll be right back with more U.S. Farm Report.